Another rejection off of the 6750 level today. This is the second time in the past week that we saw a rejection at this level. This is what we were talking about in yesterday's YouTube video, the potential for a rejection at 6750 and a drop below the 50 EMA on the 15-minute chart. That's this red line that you can see here. We've been in an uptrend ever since September 25th, so going on a couple of weeks now. Really strong uptrend, and this dip today does signal a potential shift in this trend. We could see a little bit of consolidation or even a pullback a little bit further, maybe down to the 6600 level as a lower probability move. However, after the dip this morning down to the big 6700 level, we did see an attempt, as weak as it may have been, an attempt at bouncing at that level. And you can see this is basically a big support zone going back to mid-September, previous resistance which broke out early in October, and we've been bouncing off of that level multiple times over the course of the last week. So far the 6700 level is holding, and that's why we say lower probability of a move down to 6600. This is the bottom end of our gamma exposure range. Obviously, you can see the largest gamma exposure concentration at that 6700 strike, and this is why we've been seeing selling pressure up here above 6700 and a couple of rejections over the last week. Basically, dealers are forced to sell above 6700 as the majority of gamma exposure is at that 6700 strike. So what we're looking for in order to overcome that selling pressure is basically we want to see market participants coming in at higher strikes. You hear us talk about this a lot in our YouTube videos. We monitor options volume at these higher strikes to gauge whether or not gamma exposure is shifting or whether or not call buyers are coming in at higher strikes. And when we look at the distribution of options volume today, for example, and this is actually the case over the last couple of trading sessions, we've seen a skew to the upside, meaning more volume is coming in at higher strikes than what we're seeing at lower strikes. And that skew tends to translate into our gamma exposure data. And this basically can offset the dealer selling pressure that we're seeing in this zone. And that also contributes to these consolidation patterns that we're seeing. We're seeing this consolidation form here over the past couple of days. However, as more gamma exposure begins to build at higher strikes, again, that's going to offset dealer selling pressure and allow price to move higher. We'll definitely be monitoring the gamma exposure data in real time tomorrow morning. So if you guys want to check it out, feel free to hop in our community Discord, absolutely free. I'll put a link in the description below. But in terms of the overall gamma exposure picture, we have this big gamma exposure at the 6,000 strike. That's been sitting there for a long time. However, the main levels that we are focused on is basically the 6,700 to 7,000. As long as this 6,700 strike holds, the 6,800 strike is our next largest GEX concentration, followed by 7,000. And 7,000 is our year-end target as we see more and more market participants continue to speculate for that blow off top up to 7,000 by year end. In terms of the volatility index, we are seeing the VIX ticking higher, up 5.31% today, closing at 1724. And we've been noting in our morning live streams this series of higher lows that we've been seeing on the VIX ever since the end of August. It's very subtle, but the compression is really getting tight here as we've seen the volatility index ticking higher on the bottom end of that range. In terms of gamma exposure on the VIX, everything's concentrated between 16 and 20. And so we do continue to see volume coming in at higher strikes. Obviously, that's mostly hedge protection. However, I do think if we get a move higher up above this most recent volatility spike, that could set off a squeeze against volatility sellers, and we could see some pretty significant movement to the upside. So we want to make sure that our portfolios are hedged in case there is any kind of outlier event, in case we see some sort of news catalyst bringing the VIX above 20. Our overall bias is bullish. However, a catalyst event and a larger VIX spike is possible, so we want to watch that very carefully. Next, let's take a look at a few names that we are actively trading. We'll start with Crowdstrike. Crowdstrike was down 2.28% today, closing at 484.62. The big 500 strike has been in play. That's the largest gamma exposure concentration. You can see we've rejected from that level a couple of times over the last few months. Crowdstrike continuing to trade above its 50-day EMA with large GEX skewed to the upside. So overall, this does look positioned for a potential breakout breakout. And today we actually closed out a position on Crowdstrike. We were able to lock in a small profit, $367, and this was on the October 17th Crowdstrike 480-500 call debit spread position that we had on. We actually initiated this position back on September 15th, find that call debit spread for $4, and you can see the gamma exposure skewing to the upside from 450 to 500, and there was continually large volume coming in at some of these higher strikes. On this particular day, 10,000 contracts was traded at that 540 strike, and so closing above the 50-day EMA, this looked like a pretty solid entry point for a long play up to that 500 strike. So we've bounced off of that strike a couple of times now over the past couple of weeks, and even though we closed out our position, we are looking to re-enter at a later expiration date. October 17th is coming up next Friday, so we wanted to go ahead and lock in those small gains, and we're going to look for a potential breakout above this 500 level as gamma exposure is starting to grow between 500 and 600. It's still a little early, but I do think this could potentially break out into November as gamma exposure builds at these higher strikes. So that's something we're going to be watching for. Next, let's take a look at MBIS, a name that has been on the top of our watch list for a potential short play. It was actually down 5.79% today, closing at 117.70. The last couple of trading sessions has seen pretty good rejection off of its highs up here around 135. The gamma exposure, of course, is mostly concentrated between 100 and 120, and you can see there's a lot of positive and negative gamma exposure at those strikes, and I think that a further pullback into the 100 to 110 range would probably likely meet this rapidly rising 50-day EMA. The 100 level is kind of a natural support as that's been tested and retested on the breakout just recently. I don't think NBIS is done, even though it may pull back further. Just the distribution of gamma exposure and the amount of volume coming in at these higher strikes basically tells me that after a period of consolidation or further pullback, there could be another attempt later on back up to this 150 strike at a minimum. And so we'll have to monitor this. I don't think the selling is done just yet, but this is something that could offer an interesting speculative play once it gets closer to the 100 to 110 zone. And guys, don't forget, you can track our trades in real time by becoming a member at geeksoffinance.com. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. There's a ton of great traders in there sharing their own trade setups and strategies. It's a great resource, so you definitely don't want to miss that. I'll put links in the description below to all of that so you guys can check it out. Thanks so much, everybody, for watching. We'll see you guys in the next video.